Okay, so have you ever noticed this? Your favorite local dentist's office, or maybe the car wash you always go to, suddenly gets a new name and becomes part of some bigger branded chain. If that sounds familiar, well, you've probably seen a really specific and pretty clever financial strategy in action. Today, we're going to pull back the curtain on what's called the private equity roll-up playbook.
Which brings us to this question. How in the world can 1 + 1 + 1 equal 5? I mean, it sounds like some kind of trick question, right? But in the world of private equity, this isn't bad math. No, it's actually the secret formula for a super profitable strategy. Let's dig in and see how it works. So, at its heart, a private equity roll-up is a pretty simple idea. Just imagine a PE firm acting like, I don't know, a master builder with a giant set of Legos. They find an industry that's got tons of little, separate businesses, say local vet clinics, and they start buying them up, one by one. They're combining them, brick by brick, to build one single, much larger, and way more valuable company. Now, you might hear a few different names for this floating around, things like a buy-and-build strategy or a consolidation play. But honestly, don't let the jargon trip you up. The core idea is exactly the same. It's all about taking a bunch of small pieces and building something much, much bigger and stronger out of them.
All right, so what does this buy and build playbook actually look like when they put it into action? Let's break down the strategy step by step.
The whole process really kicks off with two key players. First up, the PE firm has to find its platform company. This is the big one, the cornerstone. Think of it as the solid foundation for the entire house they're about to build. It's got to be a strong, well-run business. Then they start looking for smaller, bolt-on companies. And that name is perfect because you can just think of them as strategic additions that get easily bolted on to that main platform, usually for a much lower price.
So the playbook itself pretty much unfolds in 4 main phases. Step 1, you acquire that strong platform company to build on top of. Step 2, here comes the actual roll-up. You start systematically buying up and integrating all those smaller bolt-on businesses. The third step is absolutely crucial. This is where you make the whole thing more efficient and really unlock new value. And the final step? Well, that's the exit. Cashing out by selling this new powerhouse company for a big-time profit.
Okay, but wait, where does all this new value actually come from, right? The magic word here is synergy. You've probably heard it before. It's just the idea that the combined bigger company is way more powerful and efficient than all those little companies were on their own. It's all about creating value by unlocking what are called economies of scale.
And look, synergy isn't just some corporate buzzword. It translates into actual real-world cash. For starters, you get huge cost savings by putting all the back-office stuff, like HR, accounting, IT, into one central hub. Then you get a ton of bargaining power. I mean, a national chain of vet clinics is going to get a much better deal on supplies than one little local office, right? And finally, you can open up totally new ways to make money by cross-selling different services to this new massive customer base. So, after all that work, the buying, the building, the integrating, how does the private equity firm actually get paid? Well, it all comes down to the financial endgame.
And the financial logic here is, it's really powerful. Here's how it works. Smaller, private companies are usually valued at a lower multiple of whatever they earn. But big, stable, market-leading companies, they get a much higher premium, a much higher multiple. So the entire strategy is basically this. Buy small at a low price, create a big company, and then sell that big company at that premium, high price. It's classic arbitrage.
And this is exactly how that whole 1 + 1 + 1 = 5 thing actually happens. See, each individual company has its own value, right? But once you combine them into a single, efficient, market-leading powerhouse, the total value just skyrockets. The whole really does become greater and way more profitable than the sum of its parts.
But you can't just run this play anywhere. It's not a one-size-fits-all strategy. It needs a very specific kind of playing field to actually work. So, what are the ideal conditions for a roll-up? While the perfect environment is what's called a highly fragmented industry. All that means is an industry with tons and tons of small independent players and no single giant company calling all the shots. It's a landscape that is just begging to be consolidated, especially if those little businesses have nice, predictable, steady cash flow. And this, right here, is where you've probably seen this happening in your own neighborhood. Just think about it. Local dental practices, vet clinics, HVAC repair shops, or even things like car washes or landscaping companies. These are the classic examples of those fragmented industries that are just perfect for a roll-up. This quote really just nails it. It says, "The primary goal is to create value by building a market leader that is more valuable than the sum of its parts." And that's the key, right? The goal isn't just to own a portfolio of small businesses. It's to strategically build a brand new market leader from scratch. One that, because of its scale and efficiency, is just fundamentally more valuable than all those little pieces ever could have been on their own.
So you see, this isn't just some abstract financial theory. It's a playbook that is actively reshaping the local businesses that we all see and use every single day. So here's something to think about. The next time you see a familiar local spot get a new name and a slit corporate logo, ask yourself, is this just a new sign on the door, or am I actually watching the final move in a multi-million-dollar roll-up play? Now you'll know exactly what's going on behind the scenes.